In this concept, we're going to talk a little bit about auto leasing versus auto buying. And this is an issue that most business owners will encounter at some point in their times running their business. And our concept helps decide what kind of savings your client or you will see from different options of financing, whether you're going to buy the vehicle and own it through the business or whether the business is going to lease it like any other kind of rent of equipment or a building, that kind of thing. So we'll take you through some of those pieces here. Generally, there are a couple of things that you need to understand about auto leasing versus buying. Most importantly, when we're talking about this in either situation, we're talking about the business doing the leasing or buying. Don't be confused with the individual doing that. If you do that, you're going to have to move things more towards an accountable plan, which is another concept that we have inside the software. But just keep in mind that when you're leasing a vehicle or buying it, it's through the company. So the company pays cash or takes out a loan to buy the vehicle, the asset, and it becomes an asset of the business. It is then depreciated over the life in which you own the vehicle. If you lease it, the company does not own it, but the company is renting it, and the company's name is on the lease, and the company is making the lease payments. There are pros and cons to leasing or buying. Leasing on the left is usually less expensive, less expensive, I should say, on a monthly payment basis, which is why leasing is very attractive. But the major downside to leasing is the mileage limits. If you go over the mileage that is negotiated in the lease, there's often a per mile penalty of some kind that you'll pay. It does allow business owners to get a new vehicle. The leasing does on a more repetitive basis, usually anywhere between 2 and 4 years. The transaction's usually a little bit simpler because you don't have to calculate in the instance of buying the vehicle what the vehicle is worth and what the trade-in cost will be. However, buying side, you own it, you can sell it whenever you want to. You're not bound by the terms of a 2 or 3 year lease or 4 year lease. The vehicle depreciates, and you're also able to do something with bonus depreciation, which lately has been very lucrative. So here we've kind of outlined a little bit of what on the left it's leasing and on the right it's buying, and some of the pros and cons of both. And then here is the concept planner. We've kind of thrown up an example, a demonstration here, but you can see what the business use percentage here is. This is very important. If the business use is 100%, that's great, and you get full use of some of these provisions down here at the bottom. But if it's not 100%, you need to lower it. Business use percentage means if you drive your car 70% for business and 30% for personal, that means your business use percentage would be 70. And so you need to make this drop down here 70. You can enter the purchase price, what the lease payment would be, vehicle weight. This is if the weight of the vehicle is under 6,000 pounds, meaning usually most passenger cars, that kind of thing, or at least it's rated under that, you will choose under. If it's over, which is kind of your larger SUVs and your trucks, that changes sometimes what the depreciation is on these vehicles. You can put in the lease term if it's 24 months, 36 months. Sometimes there's a lot of leases that are 40 months. And then you can compare what each year's expensing is going to look like and the tax savings associated with that, where Tax Planner Pro is actually calculating the tax savings for each year based on your current baseline projection as to what you would save. And in this particular case, with a 24-month lease or purchasing the car, purchasing seems to, or at least looks to be more lucrative from a tax perspective. And again, that is because of bonus depreciation. When you lease something, you're just leasing the depreciation payment. So it's 12 payments times $400. That's what your expense is. Thus here, $1926 would be your savings. When you purchase something, you get to depreciate large chunks of it ahead of time. However, just keep in mind that you will have to recapture some of that depreciation, meaning pay tax on the difference between what you trade in and what you get for your trade in and what the basis in the vehicle was. So in some ways, this could be considered an illusion because the vehicle may hold its value. I find it's not so much that vehicles depreciate very, very quickly, and you may end up selling it for about what your basis is. Now, we're in 2021 here, so used vehicles are at a premium right now, but keep in mind that won't be the case once the supply chain and things get back to normal. But anyways, this is how you use the planner to determine whether this is a good move for you, purchase versus buy, or purchase versus lease, excuse me. We always have, how do you decide and how do you implement a tax strategy? And here we're saying use the concept planner to decide whether leasing or buying is best for you. Then of course you go to the dealership and make that choice. Remember, again, it needs to be in the company's name for this to all work, perfectly. Otherwise, you have to get an accountable plan if you start doing things in your personal name. If you are purchasing, you get to choose between standard mileage rates and depreciation. There's several things you can do there. We may have another planner in the future that kind of goes over some of that, but this should be a very straightforward implementation once you decide whether you want to lease or you want to buy. From a strategy overall benefit, it is a very large benefit. This strategy is well tested and does have a bit of audit risk. I would say that on the audit risk side of things, this isn't low because the IRS does like to come in and take a look at, especially at like your business use percentage, to see if you're really driving 100% of the time for business, and making sure that you've entered the right amounts for mileage, that kind of thing. And it must be implemented by December 31st of the tax year to get any benefit in the current tax year. If you buy a car in 2022, you can't take a 2021 deduction for it. You'd have to wait until 2022. So implement these things during the current tax year. As always, for more information or for help, you can reach out to us at support@taxplannerpro.com. You can go to our support forum. I have some links here in the presentation and in the software that you can go to if you're interested in more information about these things, and you can always use the chat to track us down and ask us any questions that you need to. As always, thank you for using Tax Planner Pro. We appreciate your business, and if you need anything, please let us know.